Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's September the 24th. This will be our chart lesson for today. Um, Started out, I was looking at this as a trading range. You can see there's two tiers here. There's a midline, there's a low area, high area, and then notice this line. Once we broke higher, you're looking for a measured move, and that's where we got to before we got the correction. And now we're working higher again. So that was one way I looked at it. The other way, it looks like another typical two-tiered channel working up here. We went much higher than that, but you may have to assume that if this is right, that this is the midline, and maybe we're heading to here. So you look for another measured move. Another thing I would look at was um, this was the first move up and then your bigger correction and then a measured move, and that gets you pretty close, not as close as the others. So and it could be that there's another channel in here. Since we've got this now here, we should probably put this on here and look around, um, and you see that does fit pretty fairly nicely. So it could be that we have a channel working up here as well. So um, we bounced off that line 3 times there. So just something to think about if you're still trading. It's getting late in the afternoon, but and you might go ahead and measure this again, this range right here, and have from here to here is another possible target. Oops, wrong one. So that's another possibility as well. So these are the things I'm just usually it's a little clear. Last couple of days have been just different. Today we ended up getting some fairly nice movement to the upside, and we ended up getting some yesterday, but um, the channel that I had marked out was very clear and obvious, but it just prices just reacted a little differently. I don't know. You just never really get a sustained move in one direction, and then you get the corrections to the upside that are kind of fast and violent. Today it was kind of just the opposite. We were moving to the upside, and you get these corrections to the downside that are kind of fast and violent. But really, since about just slightly after 9, it's been all uphill. We had a little correction here, but other than that, it's been all uphill. And so, just draw your short-term trend lines and go with them. You can see I've got them drawn in here. I've got the channels drawn in some cases, but a lot of times there's just a trend line there. It's fairly obvious that, this fits well on the other side. You don't even, I've looked at it so much I don't even have to draw them sometimes. I generally put them on here because it makes it easier for other people to recognize. But that's how you test things. You make sure they fit properly, and you can see that fitting just perfectly there. Um, and if you copy this one off this side, it fits there as well. So anyway, let's talk about the trades. I'm going to make this a little bit bigger because it's hard to see, and it's a little messy too. Um, I'm putting these open, high, low closes for today and the previous day. And you can see how they came into play. This was the lows of yesterday. Notice that's where we finally found traction and went higher. So it pays to, and notice too, this was the open of today and the close of yesterday. Notice how it came into play as well. Prices reversed off it multiple times. And then, what else was it up here? This was the high. This is the high of today. I was thinking the highs of yesterday were in there somewhere. Maybe there. Anyway, I've been putting those on there and making a point to point them out because they do become important areas of the price action. So be aware of them. Don't overlook them. So, but let's talk about the trades. First trade I saw was you've got this channel working up, and you had a break. You really had a break and a new high, but you know, I don't have it on here. Let me go ahead and put that on here too, because it makes it. And I was looking at this as being a possible channel, and it probably is. And you can see there's the upper side of it. So then you get the break of it here and a move to a new high, and then you sold off. So you see it either way, but looking at it this way with just the short term, you get the you could say you could maybe draw this a little bit different, and it wouldn't be quite clear if that was a close outside. But anyway, either way you looked at it, if you were looking at this as the first break, and then you get one leg up, a correction, a second leg up. But you really needed to be looking at this bigger channel here too, and that's obvious that that's holding prices up through there. You get the break, a couple legs up to a new high, and then it sells off really rapidly, and that's kind of what I've been talking about. You know, a lot of times a reversal, it takes a little while for the steam to run out, and then finally it reverses, but this thing just reversed and boom. And that's kind of what's happened lately, is things just reverse and suddenly are going just as fast in the other direction, or faster than with the trend. And early it was up, and then it was down, and then it's been up ever since. So this is more rangy looking, and you can see I was playing the range lines and have them marked and so forth. This is actually supposed to be blue. Just happened to look at that and it looked odd, but that's supposed to be blue. But anyway, let's talk about the trade. So if you were playing this short term, we already had the new high, then you had a first entry, pull back, a second entry long. You don't want to go long right there, so you're just kind of sitting. And when that breaks higher and turns and goes out the other side on a failed second entry long, I liked it to the short side. And it was a quick, easy move. And then you get a bounce here right off of that area right there. You get a bounce, a little pullback, and there's a second entry long right there. And it's such a little bitty bar. Let me get this out of the way. Look how small that little doji is. Really, your stop should go below this bar. This is really your signal bar. And you might have even thought about going long there, but I think you needed that move up and then a correction and take a second entry here, because that was a pretty good sell-off. But if you're looking at this bigger channel, you're still looking for a retest. So I kind of like that, just for the fact that it was such a tiny bar. And you know, I just use my stop right there and get a very low low risk entry. But technically, you probably should put your stop down here below this, because it could have went higher and backed up a little bit and trapped you like it did right here, and then gone higher, because that's not uncommon for them to make those little moves back and trap people and then go higher. But I like that for a second entry long, and this is almost like a failed second entry short, but you're getting so close to these class closes, and there's a lot of overlap now, and you know, some inside bars, so it just looks really, it does kind of have a little breakout pullback long there, but I just didn't think it was worth risking taking another entry there past that one. So if you did go long right there, it's not necessarily a bad trade, but there's a lot of congestion, and it is another bounce off that midline, which you know, you may not have quite had all that in place yet at that point. So obviously you should have drawn that line across those lows and closes, and when it bounced there, if it would have went on higher, I would have liked it, because it went out the low side first, but it just didn't do it that way, and that made me suspect that it might turn up and then trap people and turn back down. But it did go higher. It makes a new high. You got a couple of inside bars, and then you get that higher low. And this is similar to here. I drew it green this time because the trend has basically been up, and the EMA is still kind of pointing up. Everything's still above the EMA. So, but this is a second entry short. Notice it went higher, turned down. It didn't go out, and then you get a little higher bar, but it's only a couple of ticks there. Closes on its low. So it's a little aggressive, but I liked it. Again, your stop probably should go up here, but if you want to be a little aggressive, you could enter there and just put a stop right above that bar, and you don't risk but a couple of ticks, and you don't know that it's going to go all the way down, but you figure it'll come back and test the EMA and maybe test this. But this thing just keeps on going, and any runners you could have gotten a couple points out of them. And where does it bounce? Right off the open of the overnight, which was really yesterday afternoon. So bounces right off that. You don't have a close outside this little trend line yet, so nothing to the long side. I don't think you want to go short right here. You need to wait on a second entry. But look what happens by the time your second entry triggers. It's right here at these lows. I just don't like it, and it does go lower. And then look at that reversal bar. I like that reversal bar. Um, you probably want to. You actually could go long, and it's a second entry too. You actually could go long on a stop right above that red bar, but you probably were better off to wait on this one to close and use a limit order by dropping it maybe right at that high, because usually they'll fill that gap, and it did, and then it goes higher, and you get just enough to get out of that trade, and then it turns down again, and really you're moving down. You get a first entry, you pull back, you get a second entry. And it's somewhat of a failure, and then it turns back down, and it gives you a little more room to that low now. So I like that one, and notice it's a second entry short. Notice this new low, pull back first entry, pull back second entry. I think you wanted to wait on this bar again, and notice that little gap there, and use a limit order, and then try to get in. But if you wanted to be aggressive, you could really enter under that bar right there, because it's a double top. The EMA's pointing down. It's bouncing off this resistance, which was support, and now, and notice how the closes are a little lower. The stem is a little lower, but the closes are a little lower too. So it looks like it's losing steam. I really thought it was going to reverse here, but it didn't. And then you make another new low, and there's no reason to go long right here. That's just acceptance of the prices. But look where it bounced, right off of yesterday's low. And so you had to be paying attention to this. And, you know, it might have even been tempting to go long here, but it's way too late in the second entry. You had to go long here if you wanted to be aggressive, and I think you would have gotten out. I just don't like it, so I didn't even mark it, because it's three little dojis in a row, and the closes are getting lower and the stems are getting lower. So if you did go long there, it would have been 72 and a quarter. Yeah, it would have worked, but I just think it's aggressive. You know, if you did take it aggressively, you could have gotten in with a small stop. That's the only thing I like about it. But you see too many times the first couple attempts to reverse fail, and then you get this last little push down, and now you got a reversal bar here. One that's actually opens on its low, closes on its high. I kind of like that one, because now you've had your break. You've had a couple of legs down with one more little trap, and it goes higher. You get a failed second entry short here that reverses. It's also like a breakout pullback long, and that's what a little trap and a reversal looks like. I would have liked it better if it went on out in the same bar, but either way, it's one of those that closed on its high and opened on its next bar. Drop a limit order in there right at that high, and it ticks back, fills it, runs on up, and it keeps on going. It did come back and get the break-even stops here, but aggressive trader would probably enter again here. It's the first close outside of this channel, and it's a bounce off another possible one. If you draw that line and drag it over, it's a bounce off of that. And even though this made a new high here, that's still two legs. It looks close enough. You know, you'll hear me say that sometimes. Generally, you want it to be the real thing, but that looks like a two-legged pull back to the EMA, to the trend line. It's a little aggressive because it's a first entry, but if you look here, there's a new high, move down, a little correction, another move down. And so on a smaller version, it would be a second entry there, but it looks almost like it, even just using this, it's like two little legs back. And so I liked it regardless. And, you know, you're looking for prices still to reach these highs here. And you see we got resistance there, but then it breaks higher. Notice how that little gap, you know you've got a good point when you get these little gaps. For whatever reason, I don't know why they occur, but notice that little gap. There's no overlap. In other words, this bar here closed on its high, and this one opened on its low and kept going, and the bars it didn't tick lower and overlap there. So there's no overlap between them bars. This one did the same thing, but it ticked back and filled it, which is normally what will happen. but it didn't do it here. And for whatever reason, that's generally where it will happen, where you have these strong support and resistance areas. And I don't quite understand what it is. Maybe that, everybody's looking at it being resistance underneath and support above it, so there's not a lot of orders at those levels. I don't know. I put a lot of thought into it. I haven't come up with anything concrete that makes me, generally you can come up with a good concrete reason why everything happens. Uh, and that one, I'm not sure. My guess is that people are looking at it as support and resistance area, and so your orders are staggered on both sides, and there's not a lot of orders at that level, so it just gaps on past it. That's my theory, but I'm not really ready to write that down in stone, but that's my theory. So, but I saw this one as being aggressive. Uh, but notice you tried to come back a couple of different times. You got a little double bottom, that little one tick lower takes off. I don't see any other way to enter in here. I mean, you don't know that it's going to do this. If you didn't get in down here, I just, there's no failed second entry short or anything like that. And you're bouncing off this line all the way up. This was just a nice move. And if you didn't get in down here, and actually if you got in here, they came back for the break-ins. You either had to get in here or enter aggressively here. And otherwise, you just got to watch that go without you. And that's hard to do. And that's what will happen is people will keep watching all these little semi-corrections here. And then finally, it'll get a correction and pull back. And they'll say, well, I'm entering this time. And they enter, and then they sail the dang thing off. And I guarantee you there's some of you watching. That's probably what happened to you. So, but anyway, you get a little two-legged correction here. This is a second entry long. Again, it's aggressive because, this is just a long move. This is not a great signal bar, so you really have to wait on this bar. But the reason I think it's aggressive is because there's a little channel working down here, and there's no break and retest yet. And this one's obviously working back. If this would have closed on its high or went lower first and then turned up, I would have liked it maybe a little more. But I just think it's aggressive entering here. The only way you could do this one and come out, because I think it's a 4-tick failure, when it broke higher, you could have used a limit order and got in a tick. Actually, I think if you got in right at the high, you were all right. That's 84. No, see, that's 85. You actually had to get in to tick back in that thing, or else this was a 4-tick failure. But let's assume you did use this for your signal bar and you went long. When that ended with a stem and this ended as an inside bar, take that tick or two, whatever it gives you, or maybe even a break even, and just exit, because if that turns down right there, that's a failed second entry long. I didn't like that going short there as a trap because this thing has been too strong, and there's a good chance that it turns back, you get your break, and then it goes higher. It would have worked, and it is a failed second entry long, but I don't think it's at a point where you're wanting to counter trend trade yet because there's been no break of this bigger channel. So this was the two-legged correction here that breaks it, and then it starts moving higher again. And you just got to sit tight through all of this stuff. If you might have gone short there, and then again there's a failed second entry long, and it could have been the same thing here. So there's another failed. If you took those to the short side, that's great. I'm not going to mark them because they're too aggressive, because we're still looking for a retest of the high on this bigger channel. And so I just didn't. I just think they're too aggressive. Okay, slight interruption. I'm sorry, but I just think it's too risky. So I didn't mark them, even though they're traps. And there's some days you might take them, but this thing was just really bullish, and you're going to get a retest most likely, and it did. You just had to sit patient, and then finally you get this little move down here, and notice your break, and then there's two legs down to a new low, and so then I liked going long. It was really tempting here, but again, there's not much room before that high, and it's right at the EMA, and prices have gotten a little bit below it. So I think you're better off just to sit tight and see if you don't get that next push down to get your second leg, or wait on the second entry. And the second entry did come right here, but look, you got to go long above that. And the EMA has gotten really flat. Now you got all these bars stacking up. So just wait and see. And then it does make a new low, and you get that little bitty inside bar. I liked it for an aggressive one. Then you get your second entry here. You got a trend line now to work with. Again, it's not a great setup bar. So what you might want to do is try a limit order, and you see it came back, and it would have filled it maybe all the way back to here, and then it turns up. But if you're going to wait for that, you might as well wait and see if you get the failed second entry short and just take that long. And that's the one that really pushed prices on up. So this one is borderline green. This one's definitely green. But you're looking for a new high, and you're going to get it most likely after a move like that. And plus, if you're paying attention to the range portion of this, what this day is, you realize that's the midline. So that's where they're probably going to likely trap people to the low side, and then that's a retest of it. And then they try it one more time. I just think that there weren't enough traders convinced that we were going higher yet. And this is also a breakout pullback long, because notice let me just pull the line down here so you can see it. You can see that, and then this would have moved up here, but still, you've still got all those matching highs, and that's the one that finally went higher than these last two, so it's like the breakout pullback long. So there's some reasons to wait for this trap. And again, this one's definitely aggressive. This one, if you took it, it's aggressive in my opinion, but it is what it is. So I think you were better to wait. Look, we're headed off up to the upside again. So this market, this is definitely an uptrend. So, and I wouldn't be afraid at all to draw a line from here to here and slide that over just in case. I mean, it's really late in the day. I don't, you never say never though, because it could take off like it's taken off and go straight up again. And you may get a measured move, but I would be watching this area right here for your next resistance area, and this one as well, in case this is a midline and there's a huge channel working up here. So all things to be looking for. And notice that trap again there. You got the new high, first entry, pull back, second entry that fails, and it looks like it's going to be a second entry short. Count from here, pull back, first entry, pull back, second entry, it fails. And that's really the same thing right here, and boom, off it goes. So this is just a smaller, tighter repeat of this, and this is even similar down here. So, once you see that pattern, and you learn to spot. I love those patterns because they're always quick, easy moves, and generally they're big burst moves that give you a huge run. So we'll see what happens here. But anyway, I'm going to wrap it up for today. I hope you're having a good trading day. Hope you're having a great week. We'll be back to do it again tomorrow. But this is Mack with PriceActionTradingSystem.com, and we'll see you next time.